You are watching Market Watch, the brief overview of the key events from the world of finance. Recall that the publication of all macroeconomic reports from the United States is considered only from the perspective of how it affects the prospect of a change in the Fed's key interest rate. The published report on the change in the number of vacancies in the United States was another confirmation of the weakening of the world's largest economy. The number of open vacancies in April reached the lowest level since May 2021, having decreased by almost 300,000, with projected growth. It is for this reason that the release of data on changes in the number of people employed in the U.S. non-agricultural sector from ADP may have a strong impact on the market. In addition to data on the labor market in the United States, today we should also pay attention to the index of business activity in the service sector. This release may trigger a surge in trading activity in the event of an unexpected decline. Recall that the consensus forecast takes into account the growth of business activity, so its unexpected decrease will increase the likelihood of monetary policy easing by the Federal Reserve. Attention should also be paid to the publication of the ISM Purchasing Managers Index for the non-manufacturing sector of the United States. Weak data in this report will also contribute to the revision of monetary policy by the Federal Reserve. With all this, it is important to understand that we are in an extremely difficult situation. After all, the arrival of clearly bearish fundamental factors indicating a slowdown in the economy may not put pressure on U.S. stock indexes. This so-called phenomenon may occur due to a shift in focus to longer-term events, namely the expectation of a collapse of the U.S. economy. After all, long-term retention of the key interest rate at a very high level increases the likelihood of a crisis, while a moderate slowdown will contribute to lowering the interest rate, thereby slowing the economy, but saving it from severe shocks. Traditionally, we conclude the review with the cryptocurrency market, which is in the so-called corrective phase. 8 of the 10 largest cryptocurrencies are trading in the red zone, but we are not talking about obvious sales. In addition, Bitcoin was able to return above $70,000 again, instilling confidence in a bright future. However, there is no obvious optimism, as a strong bullish fundamental factor is needed for further growth. Perhaps investors' confidence in the reduction of the key interest rate by the Federal Reserve will change market sentiment. That's all I have. Follow the news carefully and be prepared for all the surprises of the market.